U.S. domestic output weakened in the second quarter, growing at the slowest pace in 9 months. The slowdown is blamed partly on unusually warm weather, a prolonged drought that decimated farm inventories and sent corn and soybean prices to new highs. But things are not as bad as they seem. Consumer spending outpaced growth in the second quarter, April through June. And despite high unemployment, economist Max Wolf at Greencrest Capital says companies are laying off fewer workers.
The job situation here is lousy, but it's not terrible. So it's not worsening. We're seeing 100, 150,000 new jobs a month. We do need 120,000 each month to keep pace with population growth.
The housing market has also seen steady improvement. Even after a slight dip in August, home sales are up from last year and prices are rising. As for investments, Yahoo Finance editor Aaron Task says the U.S. remains an attractive bet.
In a global economy, global investors have to put their money somewhere, and they look at the United States as a safer place to put it than Europe, certainly, than China, than a lot of the other emerging markets.
But others warn against overconfidence. Uri Dadush heads the global economics program at the Carnegie Endowment for International Peace.
Well, going forward on the world economy, there are really three big things to worry about. One, the European situation continues to be very fragile, in my view. The second is the fiscal cliff, the famous fiscal cliff, coming at the end of this year. And the third is the slowdown in the emerging markets.
Dadush says uncertainty over the debt crisis in Europe and a political stalemate in the U.S. over tax cuts and spending, known as the fiscal cliff, have the potential to plunge the global economy into another recession. Many will be looking for more clues on U.S. economic health when a key government report on the job market comes out October 5th. Arcega, VOA News, Washington.